What's up, guys? I'm Nobody Special, and we have a special guest with us today. The founder and CEO of FreightWaves, Mr. Craig Fuller, is with us. And FreightWaves is the world's leading supply chain intelligence platform. And I can tell you on a personal note, Craig, I use your website on a regular basis, really since the COVID shortages, in particular during the Great Recession. I found myself visiting your website an awful lot. Makes regular appearances on my live streams. So thank you so much for joining us and welcome.
Yeah, happy to be here.
Let's jump right into it because I'm sure your time is very much in demand these days. A lot going on in the supply chain world, especially in the context of this trade war that's recently broken out. Now, I've heard a lot of things in the last couple of days about how the shortages are coming, about how it's going to be worse than COVID. That it's hard to separate the hysterics from what's accurate here. In particular, two things I'm hearing about. I'm hearing a lot about blank sailings, and a lot of people are saying the blank sailings are already worse than COVID. So if you could you explain to the audience what is a blank sailing? How bad did you see it during COVID? And then what are we seeing now?
Yeah, I think it's really important to put this into context that, COVID was a horrific health issue, and this is entirely a policy decision. And we'll get into that in a few minutes. So there are obviously different levels of stress in the system. COVID sort of caught us off guard because I remember sort of the meltdown, but you're also worried about your family's health and everything else in between. This is strictly a supply chain story. I mean, that's exactly what we're talking about. The blank sailings is really the ocean ship lines have effectively canceled their voyages. So the way to think of this is if you think about consumers on a passenger airplane, if you only had, let's say the airplane had 100 seats and you only had 10 or 20 or 30 people in that plane, the airlines may cancel that flight to wait for more passengers to go on a later flight. And so the way to think of a blank sailing is much like a canceled airline seat or a canceled airline flight. Is effectively what's happened is that the container vessel company, the ship line, has decided not to take that voyage because they don't have what they view as an acceptable return on investment on that voyage, and therefore they're not doing it. And the reasons they do it is 99% of the time because there isn't enough cargo to actually fill that vessel up and then make the transit across the ocean. And so for them, it's a capacity optimization game as much as it's anything. And so if you sort of take the data during May of 2020, which was sort of the height of the American slowdown and COVID, it was sort of the lockdown. And this is sort of coming off of China's lockdown. We were looking at about 55 blank sailings during the month of May of 2020. And now what we're looking at is in the realm of about 80 to 90 sailings. Again, the data is out there, but it changes. Obviously, new sailings every single potential blank sailings every day, and so you're in the about 80 to 90 range. So I would say about 60% higher, 70% higher than where we were before. It's sort of the height of COVID.
Okay, so it sounds like worse than the height of COVID by a pretty good margin here.
There's also been more activity. I mean, the international ocean container market has certainly grown. There's a lot more ships on the ocean that for them to cancel. The ocean ship lines have more discipline in their business. They've been planning for trade disruptions, as everybody has in supply chain, or at least the big companies have for the past year. So there's a playbook that they've been executing to actually make this happen. So it's one data point in many others. I think probably the more interesting data point isn't the blank sailings because you get into all these complexities that take place. I think it's just looking at the raw container volume. And when you look at the number of boxes that were coming overseas, China's lost 60 to 65% of the container volume has dropped within the last 3 weeks from where we were sort of pre-Liberation Day, which in our sort of liberation date isn't April 2nd, like the announcement's actually the effective date that matters, and that would be April 9th of when this stuff left port in China. And so that's sort of the first born-on date of the tariff trade war, or at least the sort of climax of it or the acceleration of it. What I like to look at is year-over-year activity because it takes a lot of the noise out of the data, and we're looking at about 35% drop in container volume out of really year-over-year at the port of LA. And so that is a much more reliable number because it eliminates a lot of the sort of noise that tends to be in some of these data sets And it does tell us there's a substantial collapse in international ocean container freight. I mean, that is undeniable. I think there's a lot of sort of questions as to what does that mean?
Okay, so we're seeing 60 to 65% recent decline since Liberation Day or since the effective date. That would be kind of like your upper bound then. And then the lower bound, your year over year change around 35%. So it's a good bet, the overall impact on commerce lies somewhere in between those two numbers.
Yeah, I mean,
That's the working band.
I think you have to translate. Okay, so what does this mean for me? If I'm a small business owner or I'm an investor, what does it mean? And I think the way I would like to describe this is you sort of look at imports in terms of domestic trucking, because that's really, I assume most of your audience are Americans. And so we tend to be very focused on what does it mean for us as Americans. And the thing that really is important is to understand, what does this all mean? I mean, so many people get these numbers. These are big numbers. There's a lot of freight. I mean, there's the extreme folks that say, everything we buy is made in China. And if we don't have Chinese imports, we're all going to die. Well, that's not true. We'll talk about all the nuances there, why that isn't true. So you have one extreme there. And then you have the people who say, oh, we don't need China at all. Like, it doesn't matter. We'll move all that stuff back. It's great to have it at home. And somewhere the truth is in between. And so I think it's important to note that if you look at domestic freight volumes, this is freight across the United States, imports represent about 20% of the trucking volume in the U.S. And that's a really good barometer of sort of the importance of trade in terms of how important it is and perhaps how unimportant it is. Because I think if you ask someone on the street, and I'm probably doing a lot more than most, how much do they think imports represent our economy? The majority of people actually will use the word half. They think that imports are far more important to the U.S. economy than they are. And I'm not dismissing this at all, because there's obviously a lot of issues here, but it's not 50%. We're talking 20% of the trucking volume, which is really the pulse of the Main Street economy. Yes, railroads are important, but railroads tend to be a much smaller percent of the overall freight in the U.S. and tends to be more exposed to sort of raw commodities than it is in manufactured goods. So I tend to look at the trucking data as a more important barometer of sort of near-term consumer activity. And we're, like we said, about 20% of that freight on the roads is related to imports. And of that, if you sort of take the 35% drop off, then it probably means that you're going to lose anywhere from 5 to 7% of U.S. domestic trucking freight, which is probably a really good barometer to sort of economic shock of the goods economy.
So we're hearing a lot about other East Asian countries as well, like Vietnam in particular. I'm hearing a lot about some maybe nearshoring. People are phrasing it.
Well, I don't consider Vietnam near us. Maybe nearshoring, offshoring of China, or nearshoring out of China. The term nearshoring, I think friendshoring is probably more appropriate for Vietnam if you consider it an ally, which is sort of ironic considering the history of that country.
It's not exactly close, and it's not exactly a friend, to your point.
No,
yeah.
I mean, like, they're friendly, right? And they've opened up their markets, but they're playing the similar playbook to what China is. And I'm not judging it. I mean, I think they're brilliant for what they're doing, and it's obviously a different generation. But the more, when we talk about nearshoring, what we're really talking about is Mexico and the Americas. And what we've seen is that really, and this started, 5 years ago, it certainly accelerated during COVID, is a lot of companies, and we saw it really happen during the first Trump administration, is that Vietnam was the primary winner of freight as we started to put trade barriers on China and tariffs on China. A lot of that volume actually that was previously coming out of China still continued to flow, but it came from Vietnam. And the reason that happened is twofold. One is Chinese manufacturers were what we call transshipping or border skipping, which means that they were sending freight and manufactured goods into Vietnam and having the stuff effectively reboxed and repackaged in Vietnam and sent over to the United States as a Vietnamese produced good. Well, that's neither true nor credible, because it was really just companies manipulating the tax system, the tariff system. So that's one thing. The second thing is China has its own structural problems in its economy. And so a lot of Chinese manufacturers realized that they wanted to really upgrade the type of sectors that they're focused on. So they wanted to move away from low end apparel and low end sort of non-value additive type manufacturing into things that were far more sophisticated and up the value chain, things into like semiconductor chips and electronics and pharmaceuticals and stuff for the military and AI technology, et cetera. In order to do that, they needed to sort of elevate the economy. And so a lot of the low end apparel and low end manufactured goods started to make their way throughout Asia, because what happened is China played a playbook that was actually quite similar to the Japanese, as they copied this sort of Japanese model. In the 1950s and 1960s, Japanese had been completely bombed out by the Allies. It was being rebuilt. And as a way to sort of grow Japan out of its post-World War II economic depression, it ended up using manufacturing and exports as a way to do it. At some point, Japan sort of maximized its internal capabilities to become an export nation. It sort of maximized what it could produce domestically, both from a lack of supplies and materials, which is a real problem for Japan, but also just a labor problem. It didn't have enough labor, and the cost of labor in Japan is much higher than where it was throughout Asia. And so what Japan started doing in the 1960s, 70s, and 80s, and then well into the 90s, is it started to open up production plants in other countries. And these were Japanese companies that were doing that. And so a lot of those Japanese companies started to open up in other parts of Asia and started, including China, and started to produce goods for export markets, not using their own labor or source material. And that's what the Chinese have done. They saw the success of Japan as an export nation, and they've been playing the same playbook with a couple of different nuances, and perhaps even smarter than what the Japanese did. And that is why looking strictly at just the China data tells us a lot, but doesn't tell us everything going on.
Along the lines of the other East Asian countries, there was an article in Freight Waves this morning: as tariffs wreck China-U.S. exports, container rates weather the storm. And I've got a clip in here I wanted to zero in. I'll bring this up on the screen. Interestingly, the reduction in ocean capacity is smaller than the drop in China-U.S. freight demand. Levine said that the discrepancy may be explained by increased volumes from other Far East countries, whose major ports were often included in that China to North American container service routes. Shippers on these lanes are accelerating shipments before the expiration of a 90-day pause on U.S. reciprocal tariffs for these countries in July. Now, we got GDP yesterday. GDP showed a lot of front running of tariffs, right? The scramble of imports,
Yep.
Big negative on the trade balance. And if I'm interpreting this article correctly, it's kind of suggesting that is still happening outside of China with the other East Asian countries. So does that mean maybe the full brunt of the trade war hasn't been felt yet? Maybe there's still room for negotiation there? Or does that just mean whatever's coming this way from China, we have more of that to look forward to when that 90-day period elapses?
Look, I think, first of all, China's not on a 90-day clock, right? So let's just be very clear on that, just to make sure that the audience understands that the China trade war, the China-U.S. trade war, which I think we have to be honest, even though there's certainly some other actors, other countries and parts of the world that are a part and affected by this trade war, this is a China-United States story. That everyone else is sort of playing as a passenger on this train, if you will, that's really a U.S. and China story, that they're just kind of stuck. They're supporting actors. They're not the main players. But what's happening, and so China is not under a 90-day. What's happened is we've actually seen the acceleration when China retaliated, which I think the Trump administration fully expected that to happen. And I think they thought that, hey, we will get away. We said if you retaliate, we're going to double, we're going to prove it. They did it. I don't think that was an idle threat. Obviously, it was an idle threat. And I don't think that it was unanticipated. I think they knew this was going to happen, because I just think that's sort of they're well aware of the issues. And in some ways, I think they kind of wanted it to happen. I know that sounds ridiculous. But what is now happening is all these other countries have to consider their own special interest. And one of the things that the Trump administration has asked of other countries, and Vietnam is probably target number one, just because so much of the freight coming from Vietnam, so many of the goods are actually either Chinese manufactured and transshipped from China through Vietnam, or Chinese companies manufacturing for U.S. consumers, but they happen to be using Vietnamese employees, but the money still goes home to China. The reality is that America wants to place the maximum amount of pressure on these other countries. And when we get 90 days up, I would expect that the tariff on Vietnam will not be 10%. And one of the demands of the Trump administration will be that they must find a way to cut off or at least slow down and obstruct the flow of cargo from China, the manufactured goods from China to the United States through Vietnam. So there will be asks, as has been reported. Something we also suspected was those asks would be that Vietnam or any country must control the flow of goods and make sure that the products that they claim are manufactured in this country are truly manufactured by Vietnam in that case. And so we're going to continue to see this play out, but let's make no mistake, this entire global trade war, regardless of whether you support Donald Trump or against Donald Trump, and you have to understand that so much of the decisions here are about China. And so, yes, we have a global tariff of 10%, but so much of the focus is what is happening specifically with China. And if China didn't exist, I don't think there would be as much support for the trade war. This import activity would be far more distributed, and B, I don't think we would be having this conversation because we wouldn't have a national security threat in China. And I think that's what the story is. I think what American investors should know, and American businesses and consumers should know, is bilateral trade, this free trade, this globalization happening with China, is forever going to be friction and forever going to be fractured. And the idea of going back to the world of just global free trade and we're going to have a deal everything's going to be hunky dory and we're all going to hold hands is just not possible. We have gone too far, the Trump administration, but also the Biden administration. The Americans have gone way too far in placing pressure on China, and the American government and perhaps the public views China as a strategic economic rival, but also potentially a military rival. And as long as that is the case, there's always going to be pressure on that trade. And so this is a permanent fixture. We are in the Berlin Wall falling down, just the reversal. This is literally ground zero of what it looked like when the Iron Curtain fell, but let's reverse it. And now we have a fractured multipolar world once again. We are in the second Cold War. Make no mistake. That is what's happening. And that is why this is happening fast and furious. And that's important to note, because if you don't understand that, you really have a hard time understanding why are we doing this to ourselves. It seems foolish unless there's something else perhaps more important at stake.
So let's talk a little bit about timelines then. In your interview on CNN yesterday, you kind of zeroed in on 3 specific phases, if you will, or events. You kind of hinted that mid-May is going to be when we first start to see any kind of a Main Street effect. Well, you also put an emphasis on back to school and on Christmas. Could you kind of describe what is the American consumer going to be feeling as the calendar progresses between now and, say, December?
Yeah, so I think so let's talk about what's happened. So businesses I think the bigger companies that have more sophisticated supply chains are in far better shape than the small businesses. I mean, this is going to put a lot of small businesses out of work or out of business, period. People who work for small businesses are going to be able to work. There's going to be a lot of job losses. I think you have to accept that. And it is clear to me that the administration is well aware of that. And for whatever their motivations are, they believe that this is in their best interest and best interest of the country. Again, not going to debate whether that's true or not, but I will say there will be job losses. There will be pain. And that is think about where those job losses come. They first start at the ports. So if we're losing, 5 to 6% losing 35% of our imports, then you're going to have natural job adjustments that's related in somewhat in tandem. There are some union contracts that means we won't have the kinds of reductions that would at the port specifically, but you're going to have job losses at the port because there's not enough freight to work on. You're going to have the drayage drivers, these are the drivers that go in and out of the ports to move containers to an offsite warehouse. Those jobs are just not going to have as many jobs, as much work. So they'll lose income or jobs, and there'll be layoffs. The whole ecosystem. Southern California employs 500,000 people involved in logistics. And the vast majority of those jobs in logistics support the container import market. A lot of jobs will be lost in that sector. The second piece of it is that the job losses will start showing up around the country. We've already talked about the fact that we think there's a 5 to 7% loss in domestic freight That will mean job losses associated with domestic freight. This is all happening sort of May. As we roll into June, this is when it gets really interesting because this is really the start of it. And it will be incremental and intermittent. Is you'll go and you want to buy something and they won't have your selection, your color, your design, your product, your preferences. There's a chance that you will find inventory stockouts at some point in the month of June, but it won't be widespread. You shouldn't panic. As we get in July, you'll start to see more and more of these things. And as we get into August for the back to school season, we're now into this trade war, the escalation point, Liberation Day by 3 months. It's about the time where you'll start noticing that the selection, and I think for me, this is when it will become apparent that we have a much bigger issue. And I think it's when your soccer moms, I always say that the soccer moms, the suburban moms are the barometer of supply chain problems because they're keyboard warriors and hell hath no fury like a mom that can't get her hands on whatever product she deems for her child. When that happens is when this becomes apparent. And my guess is that probably takes place around the back to school season, which is in late July to early August, when they go to the store and try to buy the backpacks, the school supplies, and everything else that goes into that sort of that period of time, and they're just not there. That the apparel will be probably less selected. The backpacks won't be there. The school supplies, things like nutritional supplements and over-the-counter medicine will probably be in short supply. Batteries, all those types of things will be things that consumers will probably see shortages of.
So it sounds like shortages probably don't start showing up till late summer and then growing in severity through Christmas.
So that's the first wave of our trade war. And now let's talk about something else. So what's happened is these Chinese manufacturers had produced all this product, and those products were probably ordered 6 months to potentially a year before they ran the production lines. And at this point, in some of those orders, this is so far ahead of the election that we had that it was not even apparent that Donald Trump would even, at this point, the election was sort of an afterthought. But as we got closer and closer into the election, it's when it was sort of obvious that Donald Trump was going to be the candidate. And some companies went ahead and ordered a lot of production inventory because they anticipated trade relations accelerating. And I think anyone that's sort of in the knowledge or paying attention to supply chains expected there to be an acceleration of tension, particularly with China. And so a lot of companies went out and ordered a lot of products. But what happened is a lot of those products, the liberation tariffs were so early in his presidency that companies continued to stay on the gas and manufacturers continued to produce products. But when the liberation tariffs hit, we had 145%, and it didn't happen overnight. It was the course of, I think, a week. We got to 145%. That's when U.S. companies basically put all orders on hold. And they said, we're not taking any product orders whatsoever. And so these manufacturers in China said, hey, we have all these products and there's like no one's taking orders. These are on pause. These products are sort of backing up at the factories. And that's what that first wave is. That's what that 65% drop in China container volume is. So now we have so that's happening, and that's happening in real time. The second wave is perhaps the more concerning when it comes to inventory stockouts, because a lot of what was ordered in that first wave, companies built buffer inventory for. They went ahead and ensured that they had buffer inventories, at least larger ones did. But what's happened since then is that new orders are not flowing in. And this is April, May timeframe right now. And will continue to happen as long as we have 145% tariffs on China. New orders are not flowing in. And you take about a 6 month to 9 month lead on sort of upstream when things get produced to the times that they're actually in the store shelves. It means that because you've not had any orders probably since mid-April, or not any, but you haven't had many orders since mid-April, then you're probably looking at Halloween to that late October, November, December timeframe of when inventory should be in warehouses and should be distributed, that there are no orders to fulfill. So the items that would normally be ordered right now are simply not being ordered, and companies are not taking orders. And so you're going to see a second wave, perhaps even a more dangerous wave, because this is the type of stuff that probably wasn't inventoried. And so now we're looking at a situation where that's when the real supply chain challenges start. And that's when the pain is felt. And this is when I sound ridiculous saying it, but Christmas could be ruined. And because a lot of the stuff that you would normally expect for that Halloween to Christmas season just isn't there. Uh, Companies don't have this in warehouses and they don't have the inventory. So when you go your holiday shopping, chances are the stuff that you would normally want to buy or the hot toys may be in very limited supply this year.
That's right along the lines of one of these tweets that you put out recently that I wanted to kind of pick your brain a little bit more about. I'm going to put this up on the screen here. You said a large number of direct-to-consumer and e-commerce retailers have paused all shipments from China and are not ordering new products, as you just said. If there isn't a resolution to Chinese tariffs by June, most of these companies will have limited inventory for the holidays. Without inventory, they have no reason to advertise. This will impact media advertising this fall. Now, Craig, you're talking to a guy who makes his living on YouTube advertising. That's my bread and butter, baby. So, oh, this affects me. Well, that's different. And we just heard from two big tech companies yesterday. We got earnings from Microsoft and Meta. Both were pretty good. Meta in particular reporting a lot of ad revenue. Microsoft does a lot of enterprise software. And both companies were relatively dismissive of the trade war, saying it's not going to affect them. And that kind of stuck out at me as maybe a little short-sighted and possibly even dishonest. And your point you're making here, why are you going to buy advertising? Why is Temu going to take out those ads on Facebook?
Well, I think I have to separate Microsoft and Meta. And the reason you have to separate it is so much of Microsoft's revenue is big companies, it's big contracts. Microsoft, most small businesses are not using Microsoft Office Suite. Most small businesses are using Google. And so the bigger companies are not canceling their Microsoft Word and Microsoft 360 subscription or their enterprise Azure cloud systems contracts because of the trade war. The bigger companies, again, are in a much better position. The smaller businesses are not. So I wouldn't even consider Microsoft as a sort of a barometer of the particular types of pain that we're talking about. Now, look, Meta, on the other hand, you could make an argument with Instagram specifically and Facebook that, yes, they have exposure to this. And it's quite possible that they believe that there'll be a resolution in time where this won't be a problem. I don't know. I will tell you, having covered supply chains, that most people don't understand or think about supply chains until it's too late. They oftentimes are surprised by how these things work. I assume Meta's got some of the smartest people in the world that understand this stuff, so I'm not going to suggest that they don't know what's going on. I will say that it is very clear to me that a number of small businesses have actually stopped ordering product. And if we don't get resolution to the trade war, that they will not simply advertise. And these are the DTC companies and the e-commerce companies, which tend to rely upon these platforms to get their products, particularly around the holidays. Now, I don't know how much of Meta's advertising is big companies. And I don't know that if you're a Home Depot, if the ads for some direct to consumer hardware isn't placed, does it impact Home Depot? Home Depot is going to take out ads. And even Walmart has said that in no case, from what they understand, that they will lose market share in this trade war, that they will actually be better off than they would otherwise be because they will gain an enormous amount of market share. So it very well may be that Meta says, not a problem. I think where it starts to really show up, Snapchat came out differently. Snapchat came out and reported that their outlook was quite weak. They tend to be a little bit more dependent upon earlier, smaller businesses than some of the bigger platforms are. But I do absolutely think and have conviction that this will be a problem for some of those platforms.
So it sounds like a wait and see. Microsoft, totally different animal, but some of the other big techs that are a little more reliant on advertising, that could be
advertising or small business. And I think where I would actually expect to see it is a company like Shopify. Shopify, the vast majority of the merchants on Shopify are small businesses, and the small businesses are the ones that actually are at risk most here. And so that's where I would expect to see some of the pain is really companies like Shopify or companies that provide services to small e-commerce businesses and retailers are the ones that are probably likely to feel some pain.
Okay, so we got to talk about the freight recession. All right, I'm going to bring up a screenshot here for you. All right, and I got to laugh out of this one.
Oh God,
This is you and Zach Strickland back in November. declaring the end of the freight recession.
I know. I'm gonna have to eat that for
No,
forever.
this isn't a cheap shot, because I can tell you.
I didn't take it as a cheap shot. I'm admitting that it's a self-own. I've got to. This one's gonna haunt me for a long time.
Well, you had the data to back that up. I mean, that was a very good video. I watched it all the way through. I remember when that came out in November. I talked about it on my live stream. The data was bordering on euphoric back then. There was a lot of post-election enthusiasm. Something you mentioned earlier. It's back, isn't it? It's risen from the ashes.
Well, I think yes, this is what is it? Resurrected, I think is the term I'd be looking for. We've resurrected the freight recession. It did go in hiding for a few months. Look, I think the fundamentals of what caused the freight recession was excess capacity. We were seeing things improve. And even look, the freight market was really strong up until Valentine's Day. And it was really that pressure of this back and forth tariff problem that happened in early in the administration is what really, I think, caught a lot of businesses off guard and caused a lot of anxiety in corporate boardrooms about where they stopped making, they put a lot of their investments on hold. And that's where you start to see the data deteriorate is around Valentine's Day. Things get really, really dicey. And, we're looking at it right now, we're down 10%. So, like, I'm not going to defend my freight recession article or call, except at the time that I made the call, the thesis absolutely held. What I did not understand, estimate, or gather was that the level of tariffs that we're seeing would be effectively a blockade on Chinese goods. If we had just had 10% blanket tariffs, no problem. Like, it would be marginal. We probably wouldn't even be talking about it. Nobody care. When we're talking about 145% tariffs on China, it is effectively a blockade, and the Trump administration has admitted so much. And so that is the deep reason that the calculus has changed. So much has changed in the perception. And this is not just me. I think it's pretty much most people. I don't know that anyone that was reasonable actually thought we would see 145% tariffs on China. I think Trump made, when he was campaigning, talked about 60% was sort of the upper end for China. This is a very different ball game. The rules of the play have changed, and with it, the calls about the freight recession are also changing. And yes, I own it. I made the call, and at the time, I was absolutely enthusiastic about the direction of our economy, and I thought that the administration's policies generally would be super positive, but I did not anticipate the level of tariffs that we currently have.
And I don't think anybody anticipated that when he held up those placards on the White House lawn, and we saw some of those numbers in the math, and not just, I mean, the scope obviously, and then the retaliation is in retaliations for retaliation, but the number of other countries that were included too. I don't think anybody could have predicted that, and nobody did predict that. You can tell because the entire global financial order was just thrown into chaos.
Yeah, absolutely.
After Liberation Day.
Absolutely.
So I want to shift a little bit then to labor relations in the logistics world as it pertains to the trade war, because we kind of dodged a few bullets in 2023 and 24. We had the longshoremen strike, never quite resolved the automation issue there with the longshoremen. That's still hanging out there. We had the UPS strike in 2023. UPS workers got a very big raise coming out of that. And then recently, just a few days ago, we had 20,000 layoffs at UPS. What are you hearing on your end when it comes to labor relations and the unions and the anticipation of job losses? Are these labor disputes going to be front and center again once that happens?
No, I mean, you do tend to get a lot of noise when you have a pretty significant downturn because you had people who think it's somebody's fault, right? And the question will be, and you saw the the longshoremen, the West Coast longshoremen, put out a statement which was pretty damning towards this trade war about how misguided it was and how it was bad for workers and bad for the economy. And it was really interesting because Donald Trump was, when we saw the negotiations on the East Coast, Trump was very empathetic to the longshoremen's cause. And there was a lot of sort of support from the Trump administration of their position. And it seemed to sort of be counter to that. And I think what the ILWA is looking at is the potential substantial job losses in logistics due to the trade war. They The longshoremen benefit from international trade. They lose if trade goes away or a reduction in trade. And so that's why they are coming out in front of this and really being very vocal about their frustration and anger and perhaps a slight betrayal that they feel is at play. But it's inevitable, and we're already seeing it. And you mentioned the first sort of cuts, and Penske Logistics had a layoff. We're going to see more and more of these announcements. Transportation companies are used to making reductions in force when they have to, when there's a big issue. We're going to see more, and it's just going to continue.
Another issue you've been covering quite a bit in your feed recently is this recent executive order on truck drivers. The president recently signed an executive order mandating all truck drivers must speak fluent English. They must be compliant with federal laws, must have proper documentation, right to work. Is this just another chapter of the immigration story, which obviously was a campaign issue for the president? Or do you think this may be also an overture to labor, maybe anticipating some of that blowback from labor, in particular the Teamsters, right? Didn't endorse a candidate for the first time in a long time in the last election. That was a pretty big issue. So are these two issues related, or do you think that's just a separate animal altogether?
It's absolutely a labor issue. I mean, it's absolutely an immigration issue. I mean, the fact is the laws already existed, but if you look at a lot of the conversation is that we have an enormous amount of licenses that have been issued to non-U.S. residents, non-primary residents. Something like 40% of the CDLs and drivers on the road are first-generation immigrants, both documented and undocumented. And 10% of them, based on my sources, have said don't speak English, do not comprehend American English. And because of that problem, that is both a safety problem and a labor problem or an immigration problem. And this is one of the primary reasons the freight recession has been going on as long as it has, is the labor supply has stayed plentiful in spite of the Trump administration's crackdown on immigration. The driver situation continues to be overserved with too much capacity. And so I think what the Trump administration is doing is they're trying to effectively strangle anything that provides employment to immigrants that they view as, that are not, in their views, not supposed to be here. And trucking is one of those jobs that is frankly a lot better for an immigrant that may be undocumented, because if you think about where these ICE raids happen at the big production plants, the agricultural, the meat packing plants, et cetera. ICE is going into those places where these guest workers or migrants or illegals, whatever your term is, where they congregate. What ICE is not doing is being able to pull over truck drivers. And I think what the Trump administration is trying to do is get a handle on that, because it has become a pretty big issue. At first, I dismissed it as xenophobia because I just didn't know it was pervasive as it is. And as we've done research, we realized that it's a much more substantial issue than what we originally thought it was.
Any other issues out there in the logistics world that maybe are flying under the radar that you think people probably want to know about, or steps that they could take to better prepare for what's coming?
I think, we're in a fog of war situation. The stuff is changing literally every day. I mean, what I would leave your audience with, bottom line, so if you're interested in trade and global trade and what's happening on the ground from a first-hand account, freightwise.com, we're constantly putting out content. My ex account at Freight Alleys, constantly putting out content. But I think the bottom line is this: the bilateral trade, the world of free trade, is gone. And I think you have to accept that. Like, you think about the 5 stages of grief, so many small businesses, and I think American consumers will get there, are in this denial phase that we're going to get a deal. That's where the bargaining comes in, right? Let's get a deal. I'll do anything. And I've heard people say, let's just declare winner. I've said it. Let's just let Trump declare victory and let's all go about our way. We have to move beyond that, because you can't make decisions as long as you're in denial or you're in bargaining, because you're hoping somebody can come rescue. And I talked to a lot of small business owners, and that's what they're betting on. I need to lay off. My business is done if I don't get relief. And by July, I'm done. And I asked them, have you made layoffs? No, because I think we're going to get a deal. And the issue is that as long as they're stranded, their cash and inventory positions are draining. Probably more important, their inventory positions are draining, and eventually their cash positions are draining, and they're not taking action. And what I would say is, this is where I sit. and I've been saying it even when Biden was office in 2022, is that we're in a second Cold War and supply chains at the front lines. This issue with trade friction with China is much bigger than just Donald Trump's ego trying to attack the Chinese. This is a fundamental strategic rival. And if you study anything about history, you know that when you have two very powerful, like one up and coming power and a hegemon starting to rival each other, and there are trade situations that the majority of the time, not the minority, but the majority of the time, those things do go into kinetic war. Like that's what happens. In fact, I'm an American. I'm a proud American, but I know American history. What started the Revolutionary War was an economic dispute, a trade dispute, and a tax dispute between the Americans and the British. What started the Civil War, we can argue about all of the things, was an economic dispute between the North and the South. And let's be frank, the reason that the North won wasn't because they held the moral ground, which they did. I want to be very clear. They held the moral ground. They certainly held the higher ground. But the reason that the North won and beat the South was entirely because of the supply chain that the North and the factories and the industry that the North had that the South didn't. The South was generally the wealthier people lived in the South, the American South, because these were the big plantation owners. And it was the cities that the less wealthy or the big concentration were less wealthy, but they had the industry. And when you think about it from that perspective, and I'm not trying to compare rural America to the current United States, but there is, when you look at the industry, it's in China. So if this ever were to get Connecticut, we are at an enormous disadvantage to the Chinese because they own all of the manufacturing. Our Department of Defense is dependent upon goods from China for our weapons, for our systems. And this means that we have to decouple ourselves at some point. So unless there is a massive regime change or direction of the posturing of the People's Republic of China and their desire to own the future, which means they have to take Taiwan to do that because of Taiwan semiconductor, then you are looking at a constant level of trade friction, regardless of what happens in the next couple of months. And if you know that and you accept that, then it's time to think about what's the next step. And so from where I sit, every business person that has any dependency on China needs to be thinking about, I have to find alternatives. And the best alternatives, and this is not my American flag, but I'm going to put it out there, but the best and safest alternatives are closer to home. Not all production can and should move back to the United States, regardless of what people think. Mexico and the Americas is a far safer environment for your supply chains because those countries are far less likely to get into a military or national security dispute with the United States. There'll be frictions, but there's not going to be a war. We are not going to war with the Mexicans. I can promise you that. We've done that. This is not happening. But this is a permanent issue. And the best way to sort of know what's happening is to look at the supply chain stories because they will tell you that because this is where it's all playing out, as it does in every military conflict.
That's a very interesting perspective you offered there about the differences in the economies between the North and the South and during the Civil War. And I would say even more recently in history, the differences between the Axis and the Allies in World War II, where the Axis had argued, I think, pretty clearly the superior technology, Absolutely. The more experienced militaries, as we have now.
I mean, Hitler did not think the Americas could catch up. Like he didn't think America had the end. He perceived America as lazy. And this is what, if you listen to people talk about America, this is what they would say about Americans. We're lazy. We don't have the industrial base. We don't have the support. We don't have the capital. Hitler thought that. The Japanese thought the same thing. They thought that they had superiority over the United States in production. This time, China has the superiority to us. We don't have the capacity, the industrial capacity in the US to survive a war. And China is well aware of that. One of the points that I have been, everybody's been asking why. If the data is clear, is the administration aware of what's happening in the economy? And I would say, yes, absolutely. They are aware. They're not so distant. In fact, I think the Trump administration, by reputation and by who's in that cabinet, is far closer to what's happening on Wall Street and the economy than the Biden administration was. They were a little bit distant from that and sort of seemed a little bit almost, I wouldn't say disinterested, but not concerned about it. Trump has always been worried about the stock market, which is one reason that I think a lot of investors wanted Donald Trump to win, because you're like, hey, we're all in this together. That's not happened. So I think the Trump administration is absolutely clear. But I think what's also playing here is, and so you have two sort of schools of thoughts. You have on the one end, you have people who claim that he's a madman and he's just doing this out of his own ego and he's trying to prove a point. Okay, that's one argument. And then you have the other argument that I've also heard is this is a national security issue, and folks in the Defense Department and the intelligence community believe that the China-Taiwan thing is going to become kinetic at some point in the near future, in the intermediate future, whether that's soon or whatever, and that the folks advising around trade policy are closer to the Department of Defense. The Department of Defense is influencing these decisions, and the national security apparatus is also influencing them, and they want to break the Chinese economy before it can become kinetic. And that is, so I think we're in between two realities and you can pick your poison and you can read the tea leaves and you can justify every single one of those on that. It's a fog of war situation, but I tend to be somewhere in the middle, maybe. Not necessarily that Trump's a madman, but I do believe there's a lot of ego there. I think you could say that. I think he is very stubborn. I think he wants to make a point. But I also believe that there is something that's not obvious to us, because I believe that the administration is well aware of the data. They're well aware of the economic pain. And for some reason, they're willing to take us down that road that not just Donald Trump, but everyone around him and folks in the national security apparatus and in Treasury believe that for some reason, this is what's best for the United States. And I think it's not for me to say, but I think those arguments do kind of play well, because you start to look at the actions. In spite of the pressure, we are not seeing a reduction in these tariffs, which tells me we're going to have them. Even if it's false, even if that's not happening, if you look at the administration, they have been doubling down on tariff talk in the last week. Donald Trump has made numerous conversations that he believes will offset income tax, and he thinks is the greatest policy decisions in the history of mankind. And his cabinet said as much. And so as long as he believes that, you're not going to get the Chinese, unless they have absolutely a catastrophic situation, they're unlikely to come to the table for so many cultural reasons and structural reasons that this is going to go on much longer than I think most people think.
Well, Craig, look, I know your time is very much in demand these days. A lot happening in your world. So thank you for sharing some of it with our viewers today. Once again, guys, that's Craig Fuller, founder and CEO of FreightWaves. Check out freightwaves.com. That is a fantastic resource. You'll see it there days before you'll see anything in the mainstream press if it pertains to logistics. So I check that one daily. Recommend you do that the same. Craig, thank you again. And everybody else, until next time, live small and dream big.
Thank you for having me.